All right. Hey, everyone. I'm Alaina from Investing Bay. It's Alaina Bradley, social media, Alaina Nicole. But um, like we were just speaking about, I wrote a book published this year actually on basically the science of trading and the brain and what happens inside of our brains when we trade. And so I thought I'd switch it up a little tonight and just get to the root of what causes a lot of traders to not be profitable, which actually is like the majority. So I like to teach people just about themselves, and I think it really moves the needle. So let's get into it. Oh yeah, and I'm from Investing Bay. I'm sorry, I don't even think I said that. So basically, when it comes to trading, like you are the edge, right? Most traders, they are, we look to the markets or the Fed or, the government or what have you to figure out what's wrong with our trading and why things aren't working. And it really comes down to your ability to regulate your emotions, your ability to manage yourself under stress, under, constant stimulation. And so I like to really teach the science behind what's happening because it really does help traders navigate the markets. Um, and again, we're not trying to eliminate emotions. We're human, and that's part of our genetic makeup. But we want to really develop like a strong self-awareness to where we can navigate that and still, come out on top as traders. And so. I like to start at the very, very base, and I'm going to get into Maslow. So, like, I'm sure you guys have heard of Maslow's hierarchy of needs. Basically, Maslow said that, like, we can't be, our best selves until there's levels, right? There's levels. And so as traders, we have to know what level we're at, because then we can work from that. You know what I mean? So with Maslow, that base level is your physiological needs. So like your very basic food, rest, safety, stability. We need that, right? We have to have all that covered before we can move on to the next level. And so, like for the trader that's in survival mode, that's someone who's like trading to keep the lights on or trading to pay the rent. There's no room for error. And that puts a lot of unnecessary stress and pressure on your trades, and it actually breaks down your decision quality. And there's a rabbit hole of things that can go wrong when you trade in survival mode, but you do have to have like those basic needs met, those emergency funds. That gives your brain like a little, breathing room. So when you're trading, you're making decisions based on objectivity and what's actually happening and not, what you need to happen, because that's a huge difference. And so from there, you move up into the stable trader. At this point, once you have that financial stability, you can focus on really playing defense and having like, peak risk management, right? This is where we're not trading, for our day-to-day expenses. We actually have that breathing room, and that does help alleviate some of the stress. And this is actually where logic can actually re-engage, right? So we need that when we're trading. We absolutely need that. And this is that level where we can start to really see it play a role. And so up next would be like your supported trader. Trading is extremely isolating. So there's tons of trading communities, and I think they're amazing. But also herd mentality is a real thing, and so I'm really big on just making sure that you know what you're doing. You're making decisions that are in your best interest, but having a community of people and having that support, it actually does help your trading as well. Especially when it comes to things like accountability, right? A lot of people, especially in the beginning, struggle to self-analyze, and that's a big thing. Um, but basically, at this point, it just starts to like remove some of that emotional isolation, and it helps us regulate those stress hormones like your dopamine, your cortisol. We'll get into that in a minute. But yeah, this layer, I think most people are here. If not, this is just another step in the process. But after that, you get into the confident trader. At this point, you start to build consistency. You start to really build trust in yourself. One thing that's really important and that really helps build trust in yourself is, keeping your word to yourself, right? One of the things that I get on our community members about is, if you say you're done for the day, be done for the day, right? I don't want to see you back in the market later in the day because now we're lying to ourselves. And our brains, especially when we're dealing with like neuroplasticity and habit formation, we have to teach our brains right and wrong, right? Like it's almost like infantile. We have to say, hey, we said we're going to do this, we have to do it. And that translates into your trading, right? So we do that in life and it translates into our trading performance. And so from here, we move into like the self-actualized trader. This is, there's a level above this, like with the self-transcendence, but at the self-actualized point, this is really where true freedom kicks in. This is where you're able to freely access like your flow state. This takes a lot of rewiring. And like I said, we'll get into all this in a bit, but this is really where you're not trading to prove anything, right? You're not trying to prove anything to anybody. You're not trading for likes and applause. Those things actually cause dopamine issues, which we'll talk about that too. But this is, this is the ideal place that I want all my traders to be at. And then your self-transcendence, this is really just when it becomes bigger than yourself. This is like when you have like your educators and your mentors and things like that. But ideally, I would like to see more retail traders at that self-actualized stage, because I believe that's really where financial freedom lives. All right, let's keep it going. All right, so this is the issue, right? We're all humans. We're all humans and we can't help it. So our literally our brains are not built for this speculation, right? They're built for survival. And so when we are in markets, our brains, and again, this is nothing against anybody, but our brains naturally revert into those survival instincts. And those instincts are so problematic, it's not even funny, right? So most of the issues you see retail traders run into are because of their survival instincts. So once you understand how your brain's wired, you can actually start to rewire it to work for you and not against you. And so one cool quality about our brains is their neuroplasticity, right? This is our brain's ability to reshape and rewire these habits that we're going to work to develop. And so over, this is taking it back to the caveman years, but over the, centuries, I guess we can say, our brains have evolved, right? But they're basically, our brains are here to help us avoid danger, seek safety, and maximize rewards, right? And so while it sounds good, the way this manifests in your trading, and I'm sure if you guys are trading, you're familiar with this already. But again, they're just not built for rapid decision making under the pressure of a financial market. And we just want to be mindful of that and acknowledge it and not try to like trade through it. And so, yeah, trading directly challenges those natural survival instincts. All right, so when we get into like the theory of left brain and right brain dominance, everyone has the two halves, right? And they conflict. Not, I don't want to say they conflict, but they really can at times. And so you have your left brain. This is basically going to process our information, and this is where our logic lives. The left brain, it likes structure, it likes spreadsheets, it likes probabilities, and it likes checklists. And so while this is really great for like pattern recognition, our discipline, our rules, our trading rules, and things like that, our systems, this also can be problematic if we are too left brain dominant, right? So if you're too rigid in markets, it can actually be problematic because there are times where you have to be a little more intuitive, and that's where your right brain comes in. And so excuse me, you guys might have heard of like analysis paralysis, where it's like you're so stuck on, looking for, whatever you're looking for, whatever your criteria is to enter or exit a trade. But you get so stuck on that that you actually can't make a decision. That's too much left brain, right? And so on the right side, this is going to process this is where our emotions are, right? This is going to process the information more holistically. It's a little more abstract. But this is where like you get a feel for the market, like a feel for the momentum, the rhythm of the market. I call it the pulse, right? And so like this is for me personally, this is where I naturally lean, right? And so when I was developing myself and I worked with a mentor, I had to learn more to incorporate more left brain, right? And so some people may be more left and they need to incorporate more right. But ideally, you want to be, you want both sides working together. And that's like the ideal spot to be because you can be too, I started trading. Um, I started trading like right after the pandemic actually, and it was, the market was just going straight up in the air. And so I was just buying things and it was just vibes. I didn't have a system, I didn't have structure, I didn't have any of that. And I was just making money and it actually was, I mean, it was fun, right? I had the time of my life. But once the market turned, I wasn't prepared for that. And it caused so many, um, I guess, I don't want to say it did cause problems, but it made me more aware of, hey, I actually don't have a handle on this. I actually don't understand this. And now I've got all these bad habits from YOLOing through 2020, right? So I just want to help people understand these things before they have to go through that. Because the process of rewiring, it's insane. And the more damage you do along the way, the harder it is to rewire on the other side of it. But basically, the right side of your brain, that's where your intuition is. One thing that's really cool about intuition is that it's not random. Your brain can pick up on little, micro, very, very tiny data points, and they're so small that your brain literally can't put them into words. And so it will send out like a somatic signal through your body, right? And that's your intuition. So it's not random. That's just your body's way of saying, hey, we've actually seen this before. And so the longer you're in markets, the more you look at price action, the more you tap in with yourself, your intuition gets sharper and you'll be more comfortable trusting it if you're not already. All right, so the prefrontal cortex, um, let's just, we're going to talk about a couple different parts of the brain tonight, just a couple. But your PFC, right, for short. This is like your logic and planning center. We call this the CEO. And so basically, this is going to handle logic, excuse me, strategy, discipline, impulse control. But essentially, your PFC, when your PFC is online, it's all good, right? Your PFC is like, I can stick to my trading plan. This is my entry criteria. This is my target. I'm getting out, or we've hit my loss threshold. I'm getting out. We hit my stop. Whatever that plan was, your PFC, when it's online, we can work with the plan, right? We can respect the plan. So here lies the issue with the prefrontal cortex. It's sensitive to overstimulation. It is sensitive to fatigue. It is sensitive to stress. Cortisol and adrenaline will start to degrade the PFC and it will start to downshift, right? And the way we're wired, when this happens, right, our risk management, our trading plan, our good intentions, and our plans for the future, they go offline with it, right? And we start downshifting back into survival mode. So, your PFC, so one of the things that I always tell my students is like, pay attention to your body, right? Pay attention to those somatic signals because if you start getting anxious, if you start getting, like, what's the word? Any emotion, really, any heightened emotion, any stress is going to start to downshift that PFC. Also, lack of sleep, right? I see Twitter all the time. People are like, "We've been up all night charting, we're trading all day." That's the worst thing you can do, right? I think lack of sleep, it starts to become like equal to a blood alcohol content over like the legal threshold, right? So we need our sleep, our brains require it, and so do those good trading decisions. And so sleep and meditation, they will help you strengthen that prefrontal cortex. And we like to meditate pre-market as well. So like everyone's centered and grounded. And if you ever feel like you're not, just don't touch your portfolio, right? I'm not asking you to be perfect all day, every day. But just know yourself enough to say no when it's not an optimal time to to trade, excuse me. But yeah, here's a little quote. You might have thought of this or felt this before. I have a trading plan. Why did I abandon it? Probably because your PFC went offline, right? And so up next, we have our amygdala. This is our fear center, right? This is our own personal alarm system. Our amygdala is going to detect threats, right? Now, the problem here is it's going to interpret financial risk, right? The risk of losing money as physical danger, right? There's also pain centers in our brain that register financial loss similarly to physical pain, right? So, again, we have to work around that. We have to work around that. So, signs that your amygdala may be activated, panic selling, hesitating, revenge trading, but it's fight, flight, or freeze, right? Freeze is my personal favorite. We call this the deer in headlights, and I'm sure some of you guys may have experienced this too, but this is when you basically literally you just freeze, right? And I've seen this happen. I've had it happen to me before. I would be up in a trade and it'd be an amount I wasn't used to, and I would literally freeze, right? Like my body would just kind of shut down for a second. Same for the downside, right? Have you ever sized up really quickly and seen a number that maybe you weren't used to? It's jarring to the brain, right? It's absolutely jarring to the system. And so it's just really important when we trade, we've got to have routine. If you're looking to scale, you have to scale at a pace that your brain can keep up with. Because if we go from like one contract to 50 contracts, you're probably going to run into an issue with this amygdala, right? We've got to make sure it's baby steps. Everything we do, we want to make baby steps, just so our brains can keep up and track our progress and create those new neural pathways. And so your amygdala, it doesn't understand percentages and probabilities. All it knows is safety and threat, right? So she's very dramatic, right? This amygdala, she's very, very dramatic. But whenever it gets triggered, it's going to flood that body with stress hormones, and then it's going to trigger that prefrontal cortex to downshift. And so you can absolutely know your trading plan and break it, right? And there's also another phenomenon, cognitive dissonance. That's basically when you have two conflicting beliefs at the same time. So, like, you can know that your trade isn't working out and that your setup isn't valid, but you can also still be hopeful that it'll turn around, right? And those are two conflicting beliefs. And so, that kind of gets back into like left brain, right brain. But again, just be mindful that like your brain is going to do everything it can to protect you and your ego, which is like your sense of self. It's going to go out of its way to protect you from that. And so it's very, very important that we're self-aware with this when we trade and that we're making decisions that are based in our best financial interest always, no matter how you feel, right? Because feelings can really throw things off. All right, so here's a question. Like, what do you lose more to, right? Bad setups or bad habits? And so one of the things that's really important when you're talking about rewiring for trading is making sure that your habits are conducive to long-term success, right? We don't want to have, and I think that's actually the next slide, but we don't want to have like random wins that we didn't plan for. We don't want to have losses that are way more than what we planned for. We want to have a plan in place, and having that trading plan, it also helps you mentally, right? It helps you process your trades and reflect on your trades. And so if you're saying, hey, I'm going to get out here, and you get out here, it's like you're teaching your brain that you actually do stand on your word and that you actually do have systems in place that you can uphold. And that's how you build. You have to have something that can be repeated. And it's really, really important. So I think that's another slide later. So we'll come back to this. But up next, we have your striatum. This is where the habits live, right? So this is basically going to link dopamine to patterns of reward and repetition. And so basically reward, that's our, as traders, that's like our favorite neurotransmitter. But we'll talk more about that in a minute too. But basically, every time you take a trade, your striatum is going to encode the behaviors that you make, right? Whether they're good or bad, it doesn't differentiate. It's just saying, hey, this is what we do when we get in the market, right? So if your habits are all over the place, your brain is like, okay, let's remember that for next time, right? And so the more times you repeat that negative behavior, if it's working against you, the more your brain's encoding, like this is how we trade. And so a lot of people get trapped here. You know what I mean? A lot of people get trapped here. And again, this is where that self-awareness comes in. And so in the beginning, when you're changing up your trading habits, especially if you've already been in markets, it's a little brutal, right? Because you have to force yourself to do things that don't feel comfortable and they don't feel natural. But with repetition, it gets easier, right? Over time, it gets easier. Also, when you start seeing those results, it's a little more what's the word? It just feels better, right? It feels good when you start to see the fruits of your labor and we can start to reinforce those good trading habits, which is what we want. But yeah, good and bad habits become automatic here. If you've ever clicked a trade without thinking, like just jumped in, that's your striatum, right? It's just like, and again, this can be good or this can be bad, but if it's something that you just did out of instinct or out of what's the word, impulse, it was likely coming from your striatum. And again, repetition and consistency are how we get this to work for us and not against us. And then once your striatum is trained to crave data over, the drama of wild trading, consistency will also become automatic, which is the sweet spot. All right, let's talk about dopamine. So basically, again, dopamine is so problematic for traders. I do personally, I think there's a lot of people walking around with dopamine addiction, and that they don't realize it. And so that's kind of I've made that like my life mission to help traders overcome this. But basically, most people think dopamine comes from the win, but it actually comes from the anticipation, right? So just the thought of I can make money today, that's a dopamine spike, right? And typically that anticipation is the peak of your spike, right? So it doesn't really matter what the outcome is. Your brain's happy that we got involved at all, right? And that's very dangerous. And so when you have like an anticipated reward, and your outcome is better than you expected it to be, that is a spike of dopamine, right? That's another hit. Now, if we have a reward that we're anticipating and you have that worse than expected outcome, your dopamine levels are going to bottom out, right? They're going to drop to the floor. And so this is what creates those emotional highs and lows. And this is what we want to try to avoid trading in, right? We don't want to trade with those super, super emotional highs or those lows. We want to be baseline. I always tell people, learn your baseline, learn your flow state. We'll talk about that too. But if you're above it or below it or anything other than that baseline, we're going to sit it out. And again, that's risk management. We're saving our money and protecting it from ourselves. But this reward prediction error, this is basically why people chase and why people revenge trade. It's because they're really trying to be right, right? We're trying to prove ourselves that we're right. But you want to learn to detach from your outcomes. A lot of traders will identify, like I'm a trader, I identify as a trader, that's who I am. And then their outcomes shift their whole mood, right? It's like if I lose a trade, I'm a horrible person. It's not that, right? You're someone who trades, but like it's not your whole identity. And dopamine plays a part in that too. But we want to detach from our outcomes, right? And also we want to focus on rewarding ourselves for actually sticking to our processes because the processes are where our gains come from in the long term, right? So tracking your consistency, journaling regularly, and just again staying disciplined. And I know I actually had someone once in a class, they were like, well, I can't stay disciplined. And the actual, the science says you can, right? So there's a social psychologist named Martin Seligman, and he did a report on, or I guess a research study on all these people from different, walks of life, different age groups, and he found that there were 24, he called them character strengths that everybody possessed, right? And so those top five character strengths, those are called your signatures, right? Your signature strengths. And these things change order based on what you access the most in your day-to-day life. And so guess what one of those character strengths is, right? It is discipline and self-control, right? So we actually do have the ability to follow a plan, right? It just takes a little effort. We have to exert that effort in order to get these processes in line the way we need them to so we can grow those accounts. But yeah, everyone has that ability. So I hope you take that away with you tonight. All right, so random reinforcement. This is basically when you are rewarded, um, like when you have like wins and it makes trading addictive, right? Because you have the wins aren't, it's not all day, every day that we're winning, right? I don't personally trade every single day. I trade SPX, so it's just basically um I know enough about myself to like calm down, to take a break between my trades, because I used to sit and track it a lot, and I don't subscribe to that anymore, just because I understand a little more how the brain is actually set up. But the more random the reward, the stronger the dopamine hit. And so here's another piece I want to add to this. So when we win, when we have profitable trades or small losses that we've planned out ahead of time, we want to make sure that we are it's systematic, right? Because like random wins, like for example, earnings, right? When I first started trading, I used to trade earnings. That actually was the strategy. Someone told me that was their trading strategy. So that's how dangerous it is out here. But anyway, um, I would trade earnings and my dopamine, I was so happy. I felt like Warren Buffett because I was like, wow, I can just, swing any old thing through earnings and make all this money. Do you know how hard it was to unlearn that? Right? It actually set me up for failure. So it's just really important that when you do make money, that I call them clean wins. I'll have students that post things and I'm like, okay, well, how did we get here? And if they, they went astray or they freestyled or they had a trick shot, we don't celebrate that. Like, I'm not gonna, I don't want to reinforce this because it's not something that we can be repeat, it's not repeatable. And so, dopamine, basically, if you feel yourself constantly checking that P&L, that's dopamine, right? Jumping into trades just with vibes because you just want to be there and feel something, that is dopamine. Also, if you've got withdrawals like on weekends and holidays, that is dopamine. So like how you can regulate that, again, structure, right? It creates what's called fixed predictability. So it's not so random, right? If you know what your criteria is to enter a trade, then we wait on our criteria, right? We don't freestyle because, again, that teaches the brain that it's cool to freestyle from time to time. And that's not something that we can do repeatable to build. Journaling is everything, right? Journaling is everything. I would actually recommend setting aside time, whatever frequency that fits your schedule and your lifestyle, but journal and then go back and analyze yourself, right? We don't just want to look at the chart because the chart it is what it is, right? It's what did we do with that information? That's what's the most important here. Also, mindfulness and breath work. Sometimes you can take a couple deep breaths and just it brings your PFC back online, right? So if you ever find yourself feeling anxious or nervous or whatever those emotions are, you can actually take some deep breaths, meditate, and you can bring your PFC back to the forefront. Also, schedule breaks. Like I trade in 60 to 90-minute blocks. And since I started blocking out my trading, it has been insanely beneficial to me and also my students. And so, again, when your brain is overstimulated, like watching the market for 6+ hours, it starts to break down that decision quality, right? So we want to make sure that we're at our peak performance because the market actually demands that from us. It really does. And then again, reward your processes, not just your outcome, right? We want to make sure we're rewarding what got us that because the profits are like a symptom, right? They're a result of our processes. And so we cannot skip over that. Thank you, Sunny. So when we talk about fear, this is when your amygdala is overactivated, right? And again, this fear your brain is detecting risk, but again, it's that threat of physical pain, which again we know, consciously we know that the market is not going to cause us physical pain, but our brains, they don't interpret the data that same way, right? So we just want to be mindful of that. And if you ever do get in the mode where you're like, okay, what if I lose this trade? It's okay to just walk away or, make sure you're protected on your downside. But just know what's happening, right? Your emotions, they're signals and they're just telling you what's going on. Like I had a student maybe 2 weeks ago and she literally told me, she was like, I was in a trade today, I was in profit, and I started getting really anxious. And she was like, so I just closed the trade. I took profit and I closed the trade. And when I tell you, I could have jumped through the screen and hugged her neck because that's the type of self-awareness that I'm looking for. And again, we didn't cure her anxiety, but she managed it enough to get out of the market with profit. And that's all we're looking for here. And so it's just those little moments that make the biggest difference, right? Because you could have had a totally different situation, right? Her gains could have gone back. She could have let it go to zero. The list goes on. But again, it's all about that self-awareness. And so greed, when your dopamine spikes, your rationality is not it's not what it needs to be, right? Your PFC is going offline with those spikes. And so again, make sure we're not chasing. We don't want to totally ignore risk, and we definitely don't want to over trade out of greed. I would also say sometimes greed is rooted all the way back in Maslow. Sometimes it can come from survival instincts. It can come from scarcity. And so if you're trading and you don't have those basics met, then you can fall into this trap extremely easily because you need to make something happen. But again, we can't trade successfully from that place, right? We can't sustain that. So just keep that in mind. Also, FOMO, last but not least, this is fueled a lot of times by social comparison, that dopamine craving. But the same circuits in our brains that make social media addicting, like the likes and the love and all that, that can lead traders astray too. So sometimes traders aren't actually trading for themselves or in their best financial interest. They're trading for the applause, and we don't want to do that, right? We want to trade for what's best for our situation. All right. I just love this. If you can name it, you can tame it. And again, this goes back to that self-reflection. When you're in markets and things are going on, you've got to still be able to tap in with yourself and be mindful of how you're feeling, even like fatigue, right? If you start feeling fatigued, things like that, any like fatigue, stress, overstimulation, hunger, like we have to eat, we have to be near, like we need energy, right? Because our brain relies on that. There's actually something called ego depletion. And this is basically like we only have so much willpower, we only have so much decision-making capacity. And so when you're trading, it's really important to lock in on what you're focused on because, again, we only have so much bandwidth to go around. And so if you're trading and driving down the street, right, your brain is going to prioritize driving down the street. It's not your trade's just going to be there. And like you might not, that might not be your intention, but that's how we're wired, right? So it's just very important to be just understand yourself. Like I said, I want everyone to understand themselves on like from the biology, and then it just works its way out. And so again, repetition is everything. We want to repeat good behaviors until they become automatic. And so, like a good habit loop would be like ending your trading day, that's your cue. Your routine could be like journaling, notating any emotions you experienced. And then the reward is clarity, confidence, and then you have measurable progress. When you don't journal your trades, it's very hard to say, did I follow my plan? Did I not? And that's a yes or no question, right? Like, I hear, sometimes my students will come to me and they're like, well, I kind of followed my plan and there's no such thing, right? Either you did or you didn't, and then we can go from there on improvements. But excuse me, a bad habit loop, that's like market volatility or boredom, over trading or revenge trading would be your routine. The reward, you get that short term dopamine spike, but it's going to reinforce those impulsive spikes, or sorry, those impulsive cycles. And we don't want to do that. Again, literally everything we do in the market as traders, it has to be something that we can repeat. Otherwise, we can't build from it. So just a couple cognitive biases. You have loss aversion. This is basically just poor risk management, honestly, and just um, ignoring the limits you've set in place. And we just want to avoid that because again, and it goes back to scarcity, right? When you trade, losses are a part of it. So like you want to accept that losses are a part of it because again, that helps your neural rewiring as well. It's not shocking when you lose some money that you already said, hey, I'm okay if I lose this. Right now, if you say I'm cool to lose $100 and you lose 1,000, that's a little different, right? That's a different situation, and that's going to affect your brain a little differently too. But we want to make sure that our losses are within that threshold so we can manage it. Also, you have something called like, well, we call it like your money thermostat. This is basically like an amount of money you're comfortable with managing. And so like you'll have people that have, I've seen that I've worked with so many people at this point, but I see a lot of traders, they'll trade their accounts up to a certain amount and then they just want to smash the gas and go crazy. And it's like, okay, what's happening in there? And that brain of yours when you get to 5,000 in your account, like what's going on? And so now we can work around that, right? We can say, hey, you trade your account up to this amount, and then that money has to move somewhere else, right? We can put it in long terms, we can put it wherever. But for your brain and your process, we don't need to have that much money in your account because it's working against you, right? And there's nothing wrong with that, right? There's ways to work around it. But like I said, you just have to know yourself enough to build a system that can do that. And so, recency bias, I see this a lot too. You just won, so you're at the top of the world. But when you put so much weight on a single win, it causes overconfidence, right? I use the example of Picasso, right? We don't say he's a great artist because he had one painting, right? So one trade, cool, like great, but that it's our body of work that defines us as our performance, right? So again, same thing. If you have one loss, it doesn't mean you can't trade. It's just we signed up for this, right? There's losses involved too, but you're not defined by your outcomes, right? So the cool thing about the market and trading, if you manage your losses, you can have a 10% hit rate and still be profitable, right? Like it's not like we're doctors, right? You wouldn't go to a doctor that had a 10% success rate, but if we can manage losses, we actually can get away with low hit rates because those wins outweigh the losses, and that there's nothing wrong with that. We can actually build there. So your confirmation bias, basically, when you're super emotionally invested in being right and your trade fleshing out the way you saw it, it's very hard to be objective at that point, right? And so there's like a saying, you want to be right or do you want to be rich, right? So, um, and this again, this goes against our natural instincts. Most people don't walk around every day admitting they're wrong, like it's just not something we are used to doing, but the market requires it. And the quicker you can admit you're wrong, the better it is for your portfolio. So, nobody's going to jump out of the screen and yell at you. It's okay to be wrong, right? We can't hit every single thing. But the quicker you can cut those invalidated setups, the better off you'll be. And then last but not least, we have the gambler's fallacy. This is basically like I've lost so many things, I'm due for a win. Like the market doesn't care, right? That's ego, and the market absolutely does not care. So don't mistake like randomness for patterns, things like that. There's also something, it's called apophenia, and that's like when you start seeing patterns in charts that actually aren't there. So that's another thing to kind of watch out for. I see a lot of times people will be like, oh, that's a head and shoulders. And I'm like, it's actually not. Like, just let it play out. Like you don't have to force patterns. If it's not there, it's just not there. All right, so our flow state, this is our happy place as traders. This is when trading feels effortless. I always tell my students too, like when you are trading in the markets, you shouldn't have to like squint your eyes and tilt your head and like play let's make a deal on whether or not your setup is there, right? Your instinct should say, hey, this is it. And it really does feel effortless, right? It's like all my conditions are met and I'm just taking this trade. And so, this is when our brains are able to balance dopamine, focus, and presence as well. So this literally blends in that mindfulness, like the self-awareness, being able to quiet your mind and really focus on the task at hand. This is where that pays off. So signs that you're in your flow state, you'll feel like deeply immersed in the market. Basically, like it feels like time slows down almost. Like you don't really have self-doubt, like you're very sure of yourself. And like I said, your decisions totally feel effortless. Um, it's basically like your PFC is quiet, like your prefrontal cortex is quiet. So you're not overthinking things, and then your intuition and your pattern recognition are on point too. So this is really ideally where you want to trade from. And then if you have like a pre-market routine, you want to design it around getting you to your flow state. So like I meditate. Sometimes I'll have music. I like tea. I have my jam that I do in the morning, but I like to have those steps that I take before I enter the market because it's just like once I get in the market, I also have steps that I take to get in a trade, right? And then I have steps to take when I get out. And then I have steps to take when I'm analyzing and journaling and writing down what happened. And so the more robust your system, the better off you'll be. Like you don't really want to leave it up to um, chance, right? You don't want to leave your trading up to chance. Those systems are there to protect you from your own emotions, truly. Um, and then like what else? Yeah, I guess in order to get into your flow state, you want to make sure your intentions are clear. Again, this comes down to like your trading plan, knowing what to look for when you get in, knowing those setups, knowing your risk, right? A lot of times I hear people say they use like mental stop losses. Our brains are not set up to work with that. I know it sounds good, but I'm very vehemently against them. And the reason being is because of all this stuff that happens with our biology while we're trading. And so the same brain that's like, trust me, I'll tell you when to get out, that brain is going to protect you from loss. So even if you're way down on a trade, your brain's like, it's okay, we can still see what happens. Like it really turns into let's make a deal, right? I've had trades go from like 10% down to 20% down. Then I'm like, let's see what happens at 40 and 50. And then before you know it, all my money is in the wind. So we really just want to avoid that. And the stop loss helps with that. The physical stop protects us from that breakdown in logic. Excuse me. And so focused attention, again, you don't want to be overstimulated. And I know we live in a world now where everyone is walking around all day overstimulated, but that's where the mindfulness comes in and the meditating and just calming yourself and learning how to quiet your mind and quiet your thoughts. It's very, I don't want to say easy, but it is a lot easier to understand how you're feeling when your mind is not full of just stuff, right? So it's easy to say, hey, like I'm a little tired, I'm a little hungry. It's easier to walk away. But when you're just like doing things and you're on Twitter and you're on YouTube and everything's all over the place, and even just life, right? You might be at work or at home or whatever, but um, we only, like, again, we only have so much bandwidth, right? And the more attention we give to other things besides our trade, the more we're taken away from the actual task at hand with our finances. And so, yeah. Another thing that's like a sign you're in flow is when you are energized. Like you feel energized, like alert and centered, but you're also not like anxious. So it's just like you're just locked in. Um, and again, how you want to sustain your flow state, a pre-trade routine, breathing, breath control, that's huge. And I know it sounds silly, but it's everything. Like just being able to slow down, take a couple deep breaths. One thing with that too is our subconscious brain, it actually is a lot faster than our conscious brain. So like sometimes you'll, have an initial, urge or impulse to do something, but then logic catches up after the facts, right? So we want to make sure that we're taking our time. I don't like to rush into things. I really am big on like taking my time with this, with trading especially, just because it's so meticulous. And I guess I trade, like I said, I trade the S&P. It's a little volatile, so my decision making has to be super fast, but everything's not as hardcore as that. However, um, a system is a system. You know what I mean? So whatever you're trading, you still have to understand yourself and be able to make those quick decisions because the market can turn at the drop of a hat, as we saw actually today. So, the last thing would be like, again, just avoid overstimulation. And this is stuff I do in my daily life too, not just in the markets, but like I try to limit my screen time. I try to limit, distractions and noise and stress. Sometimes those are people, right? Sometimes the things that overstimulate me are the people I love, and I have to tell them, hey, I can't do this right now because I can't be stressed out because it's going to affect what I'm doing over here. So, it just everything we do in our day-to-day life, it's literally it just translates into the market as far as like habits, behaviors, all of those things. And so I thought I had a drill in here. Okay, I guess not. But continuing the rewire, basically, all this stuff was from my book. This slideshow was like 50 slides, David, and I was like, I don't think they're going to hear all that. But I go into way more depth in like other parts of the brain, other, neurotransmitters. There's a lot. And I just want people, like I said, the more you know about yourself, the more you can navigate these markets. And again, you literally truly are the edge. And so if you can hold yourself down, you can actually become profitable. And and I don't want to say cool, the majority of traders are not profitable. And so I personally think this is like the difference. I think this is what really makes the difference is when people um, slow down and it's not so we're not slot machine, we're not gambling. It's serious, treat it like a business and like just learn yourself so you can know how to navigate in these markets and stay calm under all this pressure. I think that's my last slide. I'm sorry, David. I thought it was an hour. How do I
Oh,
handle
that's fine.
no questions? I didn't even ask for questions. I'm sorry. Daylight savings is kicking my behind right now. I enter each trade into Excel at the end of the day, futures. Does this qualify as journaling? Absolutely. Absolutely. Yeah. However you do it, yeah, that is journaling. And I would say add your emotions to it. Like if you experience any type of emotional shifts, I would plot that too. Because sometimes there's patterns. Like sometimes people will be like, good to go in the morning. And then by the afternoon, they're fatigued or they're overstimulated because they've been sitting there all day and they start giving money back. So all those different patterns, all the trends, you want to know that about yourself. I actually tell my students in mentorship, I'm like, okay, this is your first day. You're a scientist and you're the lab rat too. So I want you guys to study yourselves literally like a lab rat and chart and clock everything you do because the more you know about yourself, the better off you'll be in these markets. Question, how do I handle shame from being wrong, losing money, making a mistake, failing? So the thing about success is that it takes all of that to be successful. So like losing money, being wrong, making mistakes, like you have to go through all that to get on the other side of it. So if you're someone who's just trying to be successful in life, there should be no shame in that whatsoever. Like, don't beat yourself up. You got to give yourself grace too. You know what I mean? But yeah, there's no shame in that. I don't know anyone that's successful that hasn't experienced all of those things you just said. And again, like, keep in mind, we're rewiring our brains, right? We were born with this wiring. And so it's not like an overnight thing. This is bit by bit, eventually you get there. But just protect your money as you develop your trade brain. No pun intended. But seriously, just give yourself some grace. Any other questions? This was fun. This is the first time I've presented on this. Thank you, Sunny. Yeah, I think that's literally all I have. I'm gonna have to do better at timing these.